What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champion of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're going to do some Netflix and chill. That's right. We're talking Netflix, ticker NFLX. If you've been living under a rock for the last 5 years, Netflix is the online streaming video service that's causing a whole lot of people to cut the cords. What do they mean by cut the cords? Well, that's when you tell your cable provider, you know what, I'm good. I don't need your entertainment via cable. I'm just going to get it online. And that's why we're seeing this dramatic shift, not only in how people are paying for cable, but how people are getting their news, how they're consuming information, all sorts of stuff. So it's a digital media revolution unfolding right before your eyes. It's actually pretty exciting. I want to apologize because I told everybody on Monday we're going to do this at 9 o'clock, and then in the other video I was like, maybe we're going to change the time. And then I didn't tell everybody about changing the time. And then this morning, everybody's like, where's Dave? Well, Dave was in the drive-thru at McDonald's. So here I am. Actually, I might have been pumping my gas at the time. I don't know when Pando called me. He got me in the middle there. I don't know. Who knows? But here we are. So I apologize for holding you guys hostage for an hour. I try not to do that, but, it's Friday, right? So couple of things here on Netflix. Reading a lot of research reports, of course, as always, in preparation for this. This is the thing with Netflix. They are... Part of this is kind of up in the air. And Kurt, you talk about it here with the Stranger Things 2, Season 2. With regards to Netflix, they've got their shows, their slate of shows, just like HBO does, just like CBS, just like NBC. Everything I'm reading about the fall lineup for your traditional media companies, the CBSs, the NBCs, the Foxes of the world, is that their fall lineup is terrible, I guess. And ratings are suffering because of it. So... And plus, NFL ratings are down, right? So more people are turning to the likes of Netflix and this. Plus, remember, guys, Netflix is raising their prices here in the U.S. So there's two things you're going to want to look for in this report. You're going to want to look for the international growth, which has been a main driver of the stock, but then also the domestic revenue growth, which is going to benefit from a price hike. So those are a couple things to look at. Before we start looking at that, let's take a look at this price consensus and EPS surprise chart here on Zax.com. As always, black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrow, look at that, they just had one, an earnings miss. The multicolored lines represent the evolution of our Zax consensus estimates over time, which correspond to the left y-axis. So when we're looking at this here, one thing that should jump off at you is that, yes, this is $2.50, and yes, the stock is trading close to 200. So that gives you an idea of the multiple that we're working with here on Netflix. But looky here, you got the rally as these estimates started coming up big and the growth was there, and then remember they had this little situation with content and spending money on content, and it was affecting their EPS numbers, and eventually they got it together, and you can see this huge EPS growth here this year, and then slated for next year, and then I'm sure a year after that, and then they can keep going off the screen. Is what they're looking for. Miguel, we're going to get into all sorts of fibs and such when we start looking at the stock chart in a little bit. So keep that in mind, my friend. And Wade, I won't tell anybody that you're watching at work. I'm at work too. All right, so what can I glean from this? Aside from the the recent miss that the market didn't really care about, they cared about it in the short term, but in the long term didn't matter. Is that this EPS growth is there, but it better stay there, and it better get better because of the valuation. Why don't we just go ahead and look at that valuation since I brought it up? Let's just do 412 PE. And try to keep your eyes in your head. Yes, these are real numbers. This is not an error. That's what happens when you make just a little bit of money and the stock price is very high. So, yeah, pretty astounding. But look, let's just go here to show you. I mean, it's all over the place with the median in, triple digits. But here's the thing, though, is that the PE's actually come down from the 300s. I mean, this is just hilarious. We're even talking like this, but come down from the 300s to the 143 level. So just to give you an idea of how crazy the PE is on this. So obviously, let's look at price to sales. We can do trailing 12. And here it makes a little bit more sense, right? Now you go, okay, so that's how these guys are looking at this company, right? Again, you get to think of the Netflixes of the world, the Amazons, right? It's not as much about PE as it is price to sales. Now, somewhere along the lines here, you got a huge multiple expansion here, even in the price to sales, peaking in 2011. Well, I guess not peaking, but peaking short term, and then now we're peaking out again here. So think about that. The price to sales of Netflix now is more dramatic than it was in 2011. But here's the other thing too. So we're comparing this to the broadcast, radio, and TV market. Netflix right now, 5.89 times sales, while the industry is almost 9 times. So that's pretty remarkable. Anybody remember what the S&P 500 was? I don't remember it either. 3 is the S&P, to give you some perspective. Let's throw in, let's get techie, right? I talked about Amazon. I know, don't start with this. But they're totally different companies. They do different. I get it, okay? I know Netflix and Amazon are different. But both of them do have streaming video, right? Okay, so let's look at the difference. Amazon's only at 2 times price of sales. So there you go. A little rich when you compare it that way, right? Who else should I throw out there just to give some perspective? I don't know, let's look at like a Twitter, right? Twitter is going to be pretty low because they don't the revenues on Twitter. Maybe we'll do Facebook after this. Look at just about in line with where Twitter is. Let's look at Facebook again. I'm just doing some techie names. Let's do the Googs. Going through the whole FANG stock, right? All the FANG stocks. Back when we used to call Alphabet Google. But so not too far out if you're comparing to some of its these glamour, not even the glamour stocks, what they used to call them, but these techie names. So not too crazy, right? Not too crazy. All right, so let's get back to Zacks. Right now, Netflix is Zacks ranked number 2 buy. Momentum style score of A, but F's in value and growth. They're going to report after the bell on Monday. So we got the rest of the trading day today. And then all of Monday, you got the whole weekend. You can binge watch Netflix while you're looking at the chart. Decide what you want to do. Now here's that revenue growth I spoke of. Current quarter revenue growth looks like 29.81. Next quarter, 26.67. Current year rounds out about 30. Next year is going to slow to 23.84%, but still huge, eye-popping growth numbers there. Taking a look at the EPS side, what does that translate to? 162% or 165.2% EPS growth for the current quarter. Next quarter looks like 113. Current year 117. Next year 74. But you're still talking $2 a share. Okay, so I guess if you're gonna put your money on something, you're gonna put it on the revenue growth, not necessarily EPS growth here. Okay, now over the last 60 days is where we see the most bullish behavior from analysts. Double-digit revisions to the upside for the current quarter, next quarter, current year. While next year you got 8 brave analysts that have increased their numbers. But take a look at this. You also have 8 analysts that have decreased their numbers for next year. So the jury's still out for next year. But I don't think the market's going to be so concerned with what's going on next year. Right now they're still in the current year and next quarter. This is where the focus is going to be. What's your growth? What have you done for me lately? Let's look at the overall effect this has had on EPS. And you'll see 90 days ago they were only looking for 22 cents. Now they're looking for 32 cents for the current quarter. Next quarter went from 27 to 32. Current year number from $1.05 to $1.19, and next year from $1.95 to $2.08. So moving in the positive direction, albeit kind of, I think it's not too big, right? But still moving. Surprise! Disappointment. Missed by a penny last time. Aside from that, it's been really small sort of beats. So they do a decent job managing the expectations of analysts. So there's that. Okay. Now, before we dig into the options chain, now let's give Miguel some charts. Okay, so right off the bat, guys. Right off the bat. Look at the interaction with the 50-day. You get a 50-day crossover here. She's off to the races. Support, retrace, support, a dip below. Whenever stock's below that 50-day, then the 200-day comes into play. They wouldn't even let it happen. Look at this. This is actually a great little chart thing, guys. Remember this. So you've got your vertical histogram, right? This is the volume at price indicator, which is this one. Sometime in some charting programs they call it like the volume profile. Or what this tells you is at these price levels, what was the volume? So similar, like if I put the volume on the bottom here, it tells me at what day was the volume. Here it just tells you at what price was the volume. Look at the huge amount of volume that went out here into this consolidation. You can see that? So it should come as no surprise that when Netflix stalled out a little bit, started to retrace, that it found a bid inside of this big volume band, right? And you can think of these volume bands, this volume at price, this kind of stuff. Don't think of it as like a firm floor. You got to think of it as a gradient, like a mattress, so to speak, right? If I jump down on my mattress, depending on how hard I jump down on it, I'm going to dip below it to a certain extent, right? If I dip below with, if I shot a bullet through it, I'd break through the bottom of it, but there's a certain amount that it can absorb. And that's exactly what happens here, is the market absorbs this dip to the downside. So this is like textbook. This is beautiful. Okay. Now that I said all that, guys, are you... My next hint, do you see it? Yeah, you do. You see it. See it over here. Draw that across. Okay? In case you were wondering. All right, now, dips down below the 50-day. Gaps up. Remember, gaps get filled. That is a risk. And the gap did get filled, right? Came down. 50-day again, gaps get filled, boom, now we're higher again, right? Came down again. 50-day. Boom, and we're higher again. So now what we have is this situation where you have a little bit of support at this high, and then you got a lot of bit of support at this high volume node. High volume node. Sounds very Anchorman, doesn't it? High volume node. In the 180s, in the low 180s, right? Okay. So that's what we're going to keep in mind. The low 180s. We're also going to worry about this. Now here's what I'm going to do. If this, Miguel, you bring it up to fibs. Check it out. How much you want to bet that this is also at a fib? How much you want to bet this is a fib of this? Man, it's actually not a spot on fib. It's 50, right? The 50 and the 50-day. But it broke that a little bit. Or did it? Or was this all intraday? Look at this. Wow, look at this. So, let me draw this line a little better. There it is. Let me get back over here and get this a little better. Okay. Okay. All right, good. Now let's look. As this came down. So here's, guys, open, close, straddles it. Open, close, straddles it, right? Intraday gets into it, closes below it, but above the 50-day. They tried to force it down, tried to force it up. No. Open below, close above. Opens down. There you go. Down. Down. Couldn't follow through on it. This was the real day. This is the bullish engulfing that was the start of the reversal. See, it takes out the lows of this, fights it off, and closes above the highs. And then off to the races again. Interesting how many days it straddled this fib, though. The range hit it pretty much every day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days straddling the fib. That's pretty interesting to see. That doesn't happen too often. Anywho, so off of that fib I want to work with. So I'm going to put an extension on this one. And you got to go in the problem is you got to go in the negative direction, but that's okay. I'm going to do the negative 23.6, the first one. That typically doesn't really hold too much weight, though, to be honest with you guys. Usually 38.2 and farther. So that 28.6 is at 202. 38.2 puts me all the way up close to 210. And where's our stock price today? Boy, this is beautiful. At 197. How much you got? Well, this will be 13s. What's this? 184, as I was saying. How much you guys want to bet that I add this, that our implied volatility move here, or implied vol here, is going to be $14? That's my guess. Again, I've been doing this lately just for giggles. The chart's telling me 14 bucks. 13, 14 bucks is what we should be looking at, all right? Keep that in mind. Let's see. Boom, where are we at? Stock's at 197 and change. That puts us here. Oh, and they're pricing in a little bit more than that. Okay, look at this. At the money calls, 910 by 925. We're going to call that 917. At the money put, 690 by 705. We could call that 6, oops, not 9, 690. 8, shall we? So we're looking for 16 bucks out of this. So a little bit more than I thought they would. 8% is what they're looking for. Now we know that Netflix has a tendency to move on earnings. Let's just see how much do they move on earnings. Look at the consolidated surprise here. You'll see last quarter. Come on. Last quarter, 14% move. It was a big move. Then you had nothing, 4%. Big move, big move, big move. This bad boy moves. So it's either nothing or it's a lot, right? You don't get too much in between. And I think the reason for that is just how hotly contested the subject of Netflix is in general. And when you get differences of opinion, man, look at that, December 2012. Put some stank on it. 50%, man. I remember buying Netflix for people back in 2012, actually. The good old days. All right. So it's going to move. It's going to move a lot, I think. So let's take a look. Let's get off the chart. Let's go back to my options chain. Let's not worry about this front week. We can worry about the front month, rather. We can go back to that when we're talking lottos. But again, guys, you know it's going to be expensive on a lotto on this. It always is. Like to go to the November expiration. Forget the side-by-side view. Let's go to the stack view. Let's take a look at what we got going on here. I basically said 210, right? That was kind of that initial target. It's all the way up there at the top. Oh, we lost our 197s. Where did the 197s stop? There we go. All right, so you see what I did, guys? Go back a week. Go to the November 10th expiration. I'm not trying to get too cute. I'm not trying to over-engineer this. What I am trying to do is get my 197.50s in there because that's where the money is right now. Basically, so the market's 16 bucks is what the market is pricing in, right? So that puts us all the way over here. That seems a way off, just far. You know what I typically like to do here is I do my halvesy, right? The market's going all the way to here. I'll say, man, what if it does half of that? Because a lot of the times the math works out where it's okay to go with a call spread or a put spread. That's half of what the market is pricing in. Okay, what does this look like? If you were to go long a 197.50 call, it's going to cost you $10.20. Simultaneously selling to open the 205 call, you're going to get back $6.98 of that. All right, $3.22 is the amount of money you would have at risk on a trade like this. Now, you can make the difference in strike prices, which is $7.50 minus that $3.22. You're talking $4.28 on $3.22 or 132%, 133%. You would need shares of Netflix to close at or above 205 at expiration on November 10th. So I'm going to say the bull debit here is long, and this is the November 10th expiration. 197.50, 205. Whoa, what am I doing here? 205 call spread for 322 net debit. Okay, and again, guys, you know we're not looking real time here. There's a delay on this, so the numbers will be massaged one way or the other. But you got a decent amount of liquidity out here, and the spread's not too far apart. You're probably 7 here, and you're probably, 10.25 or whatever here. Anyway, on the bear side, 197 is still going to be your anchor for the bears. And remember, the market's pricing in about a $16 move. That takes you all the way down to the 180s. But what do we know, guys? We know that there's a lot of support in this sort of 182.50, 185 handle, right? It's all in here where a lot of the support on the chart is, okay? But again, we can do the same thing where we do the halvesy, right? But this is I'm gonna give you something else though, some other food for thought. I think that if Netflix starts to unwind, it's not going to be like, oh, let's just tick down a couple of percent. Like it's going to be it's going to get nasty, right? So I think the bears should pinch in a little bit. Pinch in on the long side, on your long put. That's going to drop the cost basis there. Of course, it's going to bring your break even further down, but that's okay. And then still use sort of the halvesy. So now that I've colored all over this, let me clarify this. So I think that if you're a bear, you want to do the 195, 187.50 put spread. The reward is going to be better here for the bears, I believe. The 195 put is going to cost you $8. Simultaneously selling the 187.50, you're going to get back $4.85. Okay, so I guess it's not that dramatic of a difference actually. So $3.15 is going to be your net outlay here. Difference in strike prices is $7.50 minus that $3.15 is $4.35. You can make on $3.15 or 138%. So pinching it down a little bit, I think is just fine if you're in the bear case. So here I'm going to say a bear debit is long the November 10th, 195, 187.50 put spread for $3.15 net debit. I like it. Now, you credit guys out there, I think you should take a back seat because of how much Netflix has a tendency to move, right, when things really happen. But if you really want to do a credit spread, I think you need to take this knowledge, this volume knowledge, okay? Basically 182.50s on the put side. And if you want to do a credit, selling this 182.50, I think is going to be the way to go. So you can do one of two things. If you've got 18 G's in your account, you could just go ahead and sell this. And then if Netflix gets down underneath that, just have the stock put to you. And your cost basis on Netflix is going to be 182.50 minus 360. Your cost basis is going to be 178.90 on 100 shares of Netflix. If you're a long-term investor, I think that's a great idea. Again, we've got it as Zach's rank number 2 buy. Things are moving in the positive direction. I don't think you can make the argument that Netflix's business is going to shrink in the short term. I just don't. Or the intermediate term or the long term or any term you want to put on it. I just don't see it. So there's that. If you don't want to mess around with getting put the stock or any of that, then you can buy the 180s or the 177.50. So if you did the 177.50, so this is a short put spread, so this would be a bullish trade still. You sell the 182.50 for 360, simultaneously buy the 177.50 for 249. Oh, so it's $1.11 that you're going to get. Difference in strike prices is $5 minus that 111. That means 389 you're going to have at risk. So you can make 111 $389 at risk. You can make 28.5% on that trade. Okay. Now, but this is the other thing though, for you guys looking for credits. Maybe the front week you can do it, or the front month here. So let's look at the same numbers. 182.50s down to 177.50s. You're going to give up a little bit here. Actually, just do it this way. You can just do the 182.50 and the 180. You can also do this. So if you sold the 182.50, you're going to get 209. If you bought the 180, you're going to give back 159 of that. So 50 cents. And then you'll have $2 at risk. So you'll make 25% on that trade. Okay? And all you need is shares of Netflix to close at or below 182. At or above 182.50 at expiration. So I'm going to say a bull credit is short the October 20th. 182.50, 180 put spread, 50 cent net credit. I like that one. Because look, you're protected on a couple of levels. You're protected here, but I think that's not much protection. You're protected here. That's a thick band, man. That's a lot that's gone out. You know, guys, I've done so many. Oh, I didn't send out the GBU yesterday either. I'm a failure. The GBU is done. It's been done. I have to get in there. I totally forgot to send out the GBU. Man, I'm telling you, a lot going on, guys. I will send that out after this video. Bruno, I know. Sorry. I know. So I'll get that sent out. And in that, I reviewed, and I've been partial to these bearish, or these bullish rather, put spreads, being short these put spreads out of the money. But here's the thing about it, guys. Like I've been right, and they've been working. Even when, so stocks will like come down, and then they start dipping back up. And Trevor, I hear you. Thinks it's gonna move down and then it's gonna move up, and I think that's been happening a lot early on in this earnings season. We're seeing that. So perhaps it happens also with Netflix. Okay. So I'm gonna do the. You know, Bruno, it's not even. You know what's happened though? I've got to like we're moving. That's the problem. We've got the Cubs, of course, and then there's the whole transition. So we're transitioning from home run to surprise, as well as all sorts of a host of other things that are just happening. So yeah, there's a lot of organization taking place, and just a lot going on. So anyway, I think this is, I'm going to say, guys, I know I'm being conservative, but I don't care. Trade that pays is the bull credit. It just has been with this market, and this is just like this is overarching, and it's just this huge giant band of support. I think is going to help it. You know, it is, man. It is. It's like uprooting, trying to fix everything. It's trying to organize everything is really what it is. That's the frustrating part. And there's a lot to it. And then I got car insurance. I got to get new insurance and like do that. And then here I actually had to cancel the old stuff. Anyway, it's silliness. I'm not going to sit here and complain, but let's get back to this bar chart thing. Like I said, guys, I don't know, man. I'd shy away from buying any lotto tickets on $200 stocks because they're just so expensive, right? Doesn't matter in either direction. They're very expensive. I think the way to play these guys is going to be to wait until Tuesday morning, see which of these options has lost a huge chunk of, implied volatility. That's all going to go. And then if you want to fade a move, depending on what the news was, you can do that. So I think that's how you can play the Netflix. Okay? That's it, gents. That's all I got for you here today. I owe you the GBU. It's done. I did it yesterday. It's been done. I'm just going to go ahead and click a couple clacks, and that'll be ready to send out to you. So I'm going to send that out right away. Looking for suggestions for next week. Although next week I do officially take over Surprise Trader. So I won't know how time intensive that is, as I've never done it before. But I will make sure to make time, obviously, for Live Trader. And ladies. That's right. Gents and ladies. So, yeah. That's it. That's all I got. So shoot me those emails. livetrader@zax.com. If you're not hooked up on the distribution list, you need to be on the distribution list. Otherwise, you won't know what the heck is going on. Also, guys, if you were part of the premium membership, I've sent that email several times. You gotta tell them to suspend your paid subscription because Google is being punks. That's right, Google, I'm calling you out. And they've been charging people after I've made it free. I made it free in mid-September. And Google's been charging people. Even this week, they've been charging people. So, and then they try to tell people that it's my fault. Like, I was the one who didn't make it free. And trust me, it's free because we wouldn't have 100 new subscribers if it wasn't free. So, that's it, guys. And ladies. So, shoot me those emails. I'll see you in Discord. You know where the chat room is. And I want everybody to have a fantastic weekend. And go Cubbies. Unless there's Dodger fans out there. If you are a Dodgers fan, don't admit to being a Dodgers fan this week, because I might ban you for a week. So when it's all said and done, then we can go back to being friends. But as far as it goes right now, you're dead to me, just so you know. All right, everybody. Have a great weekend, and I will see you all next week. Have a good one.